Talk about Motorola. Hired Sanjay Jha from Qualcomm to oversee its mobile phone business. Todd Rosenbluth, an analyst at Standard & Poor's, says though a positive move for Motorola, they are maintaining their hold rating on that stock. Todd, thanks for coming on the show. Why don't you first tell us why this is not a buy? I mean, I know you like the guy, and the stock has been doing pretty well.
Well, we're looking at Motorola for the sum of its valuation. We think at Standard & Poor's the stock's worth $10, and right now there isn't much upside to that. It's still a turnaround story, and while there's a new executive that's in place, there's still a lot of heavy lifting to be done at Motorola on both the handset side of the business as well as just cutting costs overall. This is a company that is barely profitable and is still trying to work off some of the legacy issues.
Let's talk about Jha. Well, first of all, coming from a chip maker, is this really a smart move for Motorola's handset business?
Well, so the executive is coming from Qualcomm, which is a key supplier to the wireless handset business, and Sanjay Jha ran that business quite well, we think. It's an efficient company with a lot of technological savvy that he brings to the table. So we think it was a tough position to have to fill, but we think he's a good executive to come in there, and we think he'll help to position the company with suppliers, with customers. We think it's a good move, and obviously the stock is reflecting that.
He is, though, an engineer. Doesn't Motorola need more of a sales and marketing guru kind of guy to help beat the iPhones and BlackBerries of the world?
Motorola needs a lot of things, and they're going to bring in hopefully more than just this current executive. But from a technological standpoint, Motorola really has not evolved from the Razr platform. They're still working off of that, which was very successful in prior years, but as you mentioned, with BlackBerries, with iPhones, with other smartphones from Nokia and others, Motorola's lost significant market share. It's down below 10%, where it was above 22% in just 2006. So there's a lot of work that needs to be done, and we think there's more to be done at Motorola.
Is bringing the Razr into this century kind of this guy's main task here?
Well, what they really need to do is become more efficient in the products that they create. Right now, they have almost no presence outside of North America and Latin America, where we've seen growth in Asia, in emerging Europe. Motorola has no presence there. So they need to bring their cost structure in line to fit products that fit that area in order to help bring their market share back up. We think he can bring that to the table with the technological savvy that's there, but again, you know, with less than 10% market share, there's still a lot of work to be done at Motorola.
So a lot to do here at Motorola. I wonder, though, Sanjay Jha, you speak highly of the guy we were talking to in the break. How much of a loss is this for Qualcomm, those shares getting hurt today?
We do think it's a loss. Qualcomm has a couple of different divisions, but Sanjay Jha headed up one of the stronger growth opportunities. Qualcomm has the royalty business and then the chipset business. And so the executives that they're replacing him, while they're experienced, we don't think they bring as much to the table as Mr. Jha. And so we at Standard & Poor's, we reiterated our hold recommendation on Qualcomm, but we do think that the management loss is going to help put a little pressure on the stock in the near term.
All right. Hey, Todd, thanks so much for joining us. Todd Rosenbluth. They are coming to us from Standard & Poor's. He has a hold on both Motorola and on Qualcomm. Now, oil is down, and that's good news for food.